What's good? What's good, everyone? Welcome to another session here at the Inner Wealth channel. Today, we're going to be doing a little bit of breaking down a trade here on Dow Jones, and a little bit of chopping it up and walking you guys through my thought process starting this year and coming into a new week. My thoughts about trading the first week of the year and a few other things. So the reason I wanted to create this video was to show you guys a little bit more of entries, because I know that a lot of individuals have been requesting how I get into the market, so you guys will see a little bit of that today. And if there's anything on this video that you guys have questions on, please do not hesitate to drop it in the chat. I'm more than happy to help with any questions in regards of what I'm breaking down for you guys. So please do not hesitate to reach out, as well as I want to make it available for everyone to be able to know where to reach me if ever needed. So I'm gonna drop you guys a link. So in the description, you guys will see the link for this link tree here, okay? And in there, you guys will find my course. This is a 4-day course that I do, a one-on-one. My live access trading sessions here. This is like our private mentorship, where you get included into our group chats and get access to all of our recordings and get access to all of our New York live sessions and all of our London live session tradings. Here's where you can book a one-on-one with me or a consultation. If you ever have questions, comments, or observations, don't hesitate to book a one-on-one with me. I'm more than happy to chop it up with you guys. So that's that. You guys will find a little bit of YouTube streams here and links for the channel, and as well as you guys will find the ABCs of trading. But most importantly, what I want to bring your guys' attention to is this bottom section here. Okay, you guys will be able to find my Instagram. Now, guys, this is my only Instagram. I don't have multiple accounts, and most importantly, I want to say it here, I will never reach out to you first. Let me just tell you guys that first, okay? I will never ever reach out to you first. Most of the time, you will have to either react to one of my stories on Instagram or comment, but the likelihood is, if we never met in person, I will never ever reach out to you first. And when I do reach out to people, most of the time I do it through voice messages, because I want to show them that it's actually me that they're talking to. Okay. Second, I want you guys to direct your attention over to the middle icon, which is the Telegram icon. Okay. This Telegram icon will take you directly to my DMs. Again, this Telegram icon will take you directly to my DMs. Telegram is probably the best way to get in contact with me. Okay. And here, the YouTube icon, of course, will take you to the YouTube channel. All right. So I just wanted to give you guys that breakdown, because of course I want you guys to be able to know that you have access to me whenever. So with that, let's dive right into it. So on this first week of the year, man, what a week, man. It has been a tremendous week. My thoughts about, I always get asked questions like, hey, do you think it's safe for me to trade in December? Do you think it's safe for me to trade in January? Do you think it's safe for me to start a challenge account, in December or January through the holidays? And my answer to all of that, guys, is don't take my word for it, and don't take anyone's word for it, ever. Okay? Go out there and experience it for yourself. And don't just experience it once, experience it multiple times. You see, like, the thing is regardless whether my intentions is to take a trade or not, I show up to the charts regardless. Number one, okay? You show up to the charts regardless whether your intentions are to take trades or not. Because not every time that you show up to the charts do you have to take a trade. Okay? So not every time you show up to the charts do you have to take a trade. Okay? That's a very important note. Okay, and my other biggest thing is that, you know, I remember my first year in trading, December was probably one of like the worst months that I traded. Okay, now fast forward 2 years later, December has been one of my biggest months of 2022. Okay, it is now January 8th at the time of this recording. December was one of my biggest months, along with September of 2022. Okay, those 2 months were my biggest too, right? And December wasn't my biggest, but it was definitely up there, one of my biggest. And so I'll tell you guys what, the Christmas week, I caught 3 trades, and then the last week of the year, I caught about 3 moves as well. 3 or 4 moves. I know that I caught a little bit more on a bigger percentage New Year's week. So I just wanted to make you guys aware of that, because it's not about like what people tell you, because people will tell you their opinions from their own past experiences, and you know that at the end of the day, it's trading is personal. It's you. I mean, trading is, I'm not saying you should take trading personal, but it's personalized is what I mean. It's personalized to you, personalized to the person that you are. You trade the way that you do based on the person and your behaviors and responses and your subconscious and your beliefs. It's based all on you. If you walk into December with the thought process of, hey, December's a bad month, December's not going to be a very volatile month, then guess what? You're not going to catch or experience many moves. And guess what? You will truly live the belief that you carry. It will enforce it in your reality. You created that. Why? Because it's based from your belief. So in trading, I believe my mentor, Matthew, always tells me, bro, keep a probabilistic mindset. Says, Bastian, the most important thing when trading is to keep a probabilistic mindset, to keep an open mind. Don't take my word for it, but go out there and experience it for yourself, right? Go out there and experience it. Imagine. Okay, so now I want you guys to go out there and do the same. Experience these things for yourself. Don't take other people's words for it. Just like all the concepts that I've taught you guys on this YouTube page, don't take my words for it. Okay, go out there, backtest these things, and experience these things for yourselves. I promise you guys. Okay, I promise you. These things that most people tell you, like it's not a good week, or it's not a, hey, don't trade those news, or don't do this, don't do that, or do this or do that. I promise you, the best thing to do is take that risk yourself and experience it for yourself, because the best teacher, okay, the number one, okay, here I'll give you guys the number one best teacher in these markets is the market. And what you experience in the market, okay, will define your beliefs. So go out there and experience these things for yourselves. Okay? So with that, guys, let's jump into it. So, first week of the year, we started it at Abundant Capital with such an incredible week, with such an incredible start. Like, the week has been incredible. I think I almost caught a move almost every day this week. But I want to go over the most recent one, because not necessarily we could need to go throughout the whole week. If you guys ever want to see my breakdowns on all my trades, all my charts and have access to all those recordings, again, the second tab on the link in the description below is going to provide you with access to my private study group. Okay, this is Abundant Capital. I am an educator for Abundant Capital, and this is where you'll be able to access most of my private content, where you actually see these concepts being applied. But I'll definitely put out content on here on YouTube, so please do not stop coming by. There's going to be videos uploaded on this channel every single week 2023. All right, so with that, guys, here's my favorite trade this week. Okay, and I'll tell you guys at the end why it's my favorite. All right, so one thing I will tell you guys, on NFP week, okay, myself on NFP week, there's only one day on NFP week where I personally hold back a little bit. Okay, so we'll get to that as we go on, but I want you guys to be aware, I came into the charts with the awareness that this week is NFP week. Okay, so here on the daily, let's go on the weekly. Okay, on the weekly, you guys can see we're clearly bullish, right? Here on the weekly, we've been walking price action up to the upside. We created this new higher high. I mean, the monthly broke bullish very strongly here, as you guys can see. Lower low, lower high, lower low, higher high, right? We came back down to this last push down, and then I have now kind of been pushing up. Now, one thing I will bring up to your guys' attention is the weekly. The weekly to me is bearish. Okay, it did break bearish here, or actually no, it's still bullish. Cool. So the weekly is still bullish in my eyes. Okay, and as you guys can see here, we were, okay, at the start of the week in this previous area of accumulation here. Okay, this whole down push here before that move up. This is what we call a mitigation candle, right? So we're in a mitigation weekly candle. Okay, and so what I like to do and wait for these areas for evidence. Evidence of what? Of accumulation. Either, if I'm looking at the weekly, I want to see either a daily, preferably a daily, or 4-hour accumulation. Now, preferably a daily one. Okay, if I get a 4-hour one, I'll still accept it, but I prefer the daily break accumulation. And so once we came in here, as you guys can see, okay, let me bring this up to you guys. Okay, we have been distributing on the daily for a while now after we took out these highs here. Okay, after we took out these highs here. So as you guys can see here, okay, we got higher high, higher low, higher high, higher low, higher high. Okay, and then we break structure right here. Okay, once we broke structure, notice it didn't really matter. Okay, because here on a weekly we still had a candle, and that, regardless of being broken bearish, notice how many times we played this area. Check this out. Before we even broke to the downside, and even after. Okay, this whole down push here, that's the whole down push, and check this out. We trade above it, down back to it. What do we have here? First test into that area. Then we create a higher high, lower, higher low, comes back into it here, and then we create a new higher high. Then we create a lower low, break structure on a daily, come back into that weekly candle, and what happens? We get a rejection to the upside. Not just that, but we get a daily accumulation as well to the upside. Now, this may not have broke structure and created a new higher high, right? But it did, in fact, trade above that previous high and still respect the structure to the downside. Okay. So again, we swept that high and now we swept this previous high. So there's two major liquidity sweeps here taking place. So at this point, what my thought process is we're going to see some really strong down movement. Okay. Now, remember what I told you guys. It's not just any breaker structure that gets my attention. It's the ones that break structure or sweep liquidity. Now, this whole push up, okay, swept that major high on the left. Okay. It's not just any high. It's the, what's it called? It's the high of the beginning and high of December. But I want to bring you guys' attention to this. Look, we swept that previous monthly high. Okay. Then what happens? This is the first trading day of December right here. Before we break structure to the downside, what happens to November's high? November's high gets what? Taken out. Then what happens? We melt to the downside. Break to the downside. We are now bearish. And then what happens to that high as well? It gets taken out as well. Guys, there's three major liquidity sweeps that took place right here. Major liquidity sweeps that took place right here. And so what I like to see after a major liquidity sweep is I like to see some imbalance created. Okay, if we break structure, I like to see some imbalance created. All right, and as you guys can see here, right, we have this insufficiency that was created right here on the daily after we swept that liquidity and pushed to the downside. So now, applying all the concepts. This is our new daily range. We want to see price action short from premium, okay, and accumulate out of discount. Remember, discount is all of this, and then your premium is 50% and above, right? And if you haven't watched those videos, I highly suggest you head over to the ABCs of Smart Money Concepts on the Inner Wealth YouTube channel, and you will find the recordings for that on there. I promise you will see a lot of really cool content on there. So head over to premium and discount, so that way if you don't know what I'm talking about right here or referring to, you'll know after you're watching that whole playlist. It's very informational, so I highly encourage you guys all to do so. Okay, so now we want to find price action accumulating out of discount and distributing out of premium. Okay, so this whole imbalance here is in discount. Now, one thing I want to tell you guys, just because we have our discount and premium theory, it doesn't mean it absolutely has to get there for you to take a trade. Just because I will prefer to sell in premium doesn't mean I will only sell in premium. Okay? Just because I want to sell from premium does not mean I have to always be selling off from premium. Sometimes we won't even make it to premium before we melt. Of course, as you guys can see, price action did in fact make it back to premium on Friday on a daily. And here on the 4 hour, I know a lot of people were a little bit thrown off by the way that price action accumulated, and maybe I'll paint it over to you guys on how I viewed structure, and maybe it will help you guys clarify the structure here on Dow Jones, because to me, I've been bullish on the 4 hour for a while and targeting at least 50% of this whole range. right? Because again, I want to see price action rebalance and close that daily gap here that was illustrated on the daily, close that daily gap and return back into premium price action here at 50% or equilibrium of the range. Okay, so I'll show you guys how I personally viewed the 4 hour once we came into this previous area of accumulation on the weekly. Okay, so the way we came down from that daily breaker structure, we have a lower low, lower high, lower low, lower high, lower low. Okay, and then here is where we get our first break. Okay, we get a higher high. One sec. We get a higher high right there. Let me make sure that I don't want to confuse anybody. Let me make sure that you guys see this breaker structure here. Okay, we get this breaker structure here. All right, now we get a higher high, higher low coming into this previous area of accumulation, sweeping this liquidity. Okay, notice we came into this previous area of accumulation, respected it. Why? After we swept liquidity, because that area came into a previous area of accumulation on the weekly. Remember, this is our weekly institutional candle, right? Our previous area of accumulation on the weekly. So we're tapping into this line, which is our weekly open of that candle. I'm gonna bring you back to the referral, this one right here. After we get into that weekly area, okay, we get what? A lower low, lower high, lower low, higher high, and accumulation. And as we get that accumulation, what happens to the lows? Boom, they get taken out. We take out that previous low and that previous low. By the way, that's a previous weekly low. And then we take out our previous daily low and then accumulate to the upside. You see how liquidity, what people buying the bottoms, when they say buy low and sell high, there's so many companies that do this. There's so many automated systems that these millionaires, billionaires use to invest into the stock market or into the market. And what they do is when the market drops a certain amount of, they'll buy the bottoms. They'll invest into the bottoms. And this is exactly why the market does this. This is exactly why the algorithm does the following. It's because we don't want everyone that bought yesterday to benefit from today's longs. Everybody that bought last week to benefit from this week's longs, because most of their protective stop losses are where? Below the lows. So we run the lows, run all those stops, and then buy back up. Okay, then we get this higher low that respects this low because obviously it has all this liquidity and the weekly accumulation behind it. Okay, then notice we failed to create a higher high. Okay, price action distributes. Okay, we don't have to create a higher highs to distribute. We can definitely just distribute, which we did here. Price action distributes. Okay, we have, and we're still between this previous high and this previous low. Okay, then price action finally creates a new higher high. So from this higher high to this higher low, okay, to all of this sound in between, mess, you could say, distraction, liquidity in between, to then a new higher high. Then a new higher high pushes down and creates our new higher low right here. Now this higher low is the one that created that new higher high up there. Okay, not before sweeping all of this liquidity right here, as you guys can see. All right, and so for me, guys, when we came into my thought process into Friday, Okay, not gonna lie to you guys, like I was pretty bullish because again, 4 hours bullish, and on the daily we're in discount on the daily. We're in discount price action on the daily. We're in a previous area of accumulation on the weekly, and we're accumulating on the 4 hour. And not just that, but now the 4 hour has taken out all these previous lows, daily lows, okay, and accumulated to the upside, right? So with that, you guys can see here that sweep of liquidity, drop it down one time frame, and price action creates a higher high, higher low, higher high, higher low, and just continues to push to the upside. Now, you may be wondering, what is this candle? Now, if you don't follow news, I promise you the best thing that you can do for yourself is go to Forex Factory. Okay, and this is an economic calendar. This is where I follow up with all news. Okay, and so if you do follow up with all news, then you would have seen that Friday, January the 6th at 8:30 a.m. Eastern, okay, is the non-farm employment change, which is NFP. Okay, NFP is the unemployment rates. Okay, so December's unemployment rates came out here in January. The reports for unemployment rates here in the United States came out, okay, on January 6th for the month of December. So because we have gotten those rates, they have these effects on the market. Now, the dollar on Friday got pushed down pretty hard on NFP, and that pushed the indices to the upside. One thing I will tell you guys, if you don't know this, the DXY has a negative correlation with indices. One second. Negative correlation with indices. Okay? Meaning, if the DXY, okay, the DXY goes down, Dow Jones, NASDAQ, SPX, or indices, US indices will go up. Okay, vice versa, if DXY goes up, okay, indices will trend down. Okay, so the economic calendar has a big effect on my outlook for the day. Okay, so when news comes up, my approach to news is to wait till after or a few minutes before. You know, when it comes to indices, I like to wait for after, the effect that comes after the move. Okay, so as you guys can see here, we are bullish. We have taken all of this liquidity on the downside. Look at how many times we swept it. We swept that previous weekly low. We swept that previous daily low here before we accumulated. Okay, we come down, sweep that low one more time. Okay, previous area of accumulation, and then boom, to the upside. Then all we do, or you can see here, is, again, I told you guys, not any break of structure or not just any higher high or higher low is going to get my attention. It's the ones that have or create insufficiencies are the ones that matter to me the most. And look how many times this insufficiency got played. 1, 2, almost 3, right? 4, right? And we get played that fourth time. That fourth time comes with a major liquidity sweep. Okay, taps into that imbalance. So now we're coming out of a previous area of accumulation, and we have all of these highs, relative highs, and we're still, again, 50% and below on a daily. So you want to see, after a sweep of liquidity on the downside and accumulations, you want to see higher price action. So my eyes go to these highs. Okay, and 50% of this range. So these highs, or liquidity, again, as you guys know, liquidity is the name of the game, is a like a magnet for the algorithm. Okay, the algorithm seeks liquidity. Okay, so now we have our higher time frame targets objectives. Okay, and as you guys can see here, right, we have now on the 30-minute we have these relative equal highs here. Dropping it down another time frame, you can see with a little bit more detail what happened. We accumulated and then went to the upside. Here on the 5-minute, you can start seeing a lot more detail, and we're going to, you know, go down to the time frame where I got my entry, and as you guys can see, like, everything's extremely bullish. Okay, I like to wait for reactions that come after. Okay, so because liquidity has yet to be ran, right, because we still have all this external liquidity waiting for us, until all that external liquidity is taken, okay, I'm not going to anticipate a full-fledged retracement to the downside, not until at least one of these highs gets taken out. Okay, because that's external liquidity. All right, and if you haven't seen my internal and external liquidity, please head over to the Liquidity is the Name of the Game playlist, and I promise you guys, you will find so many nuggets on that. Okay, liquidity is the name of the game, guys. This is my belief, and I will always believe this. Liquidity runs the show. Okay, so you guys see how we have this expansion to the upside, these equal highs right here. Okay, so that's also actually a draw on liquidity, right? It's also a draw on liquidity right there. You have these equal highs. Price action is bullish. And then I noticed that we have this insufficiency right here. Okay, we have that imbalance right there, right? So we are already trading within that other imbalance on the daily. So I'm gonna pull that back to not throw us off so much. But we have this imbalance here on the 5-minute. We are bullish. And so here on the 1-minute, where my attention was drawn to, okay, I'll let this kind of play out. We created, what happens here? Check this out. We create relative equal highs. More liquidity to the upside. Okay, then we have this previous area of accumulation. Okay, so then you have your whole range here. That's your whole range right there on the 5-minute. Okay, now check this out. I let price action do its thing. Now I'm waiting for a sweep of liquidity, okay, or a reaccumulation to take this to these highs, right? Because again, my liquidity has not been taken yet. So I don't anticipate us, I don't anticipate us to return back down all the way over here until some liquidity has been taken, right? And so you guys can see here we have this imbalance. Okay, we start getting some reaction out of this previous area of accumulation. No break of structure yet, so no entry. Now I like to get into the lower time frames once liquidity has been taken, but most importantly, I like to mostly be in the market only and only when this takes place. I'm either going to be trading news, or I'm going to be trading the New York Open, the New York stock open, okay, after those news events. Okay, because we always have a, after news hit at 8:30, right here, you guys can see news hit at 8:30. We're clearly bullish. Our objective has already been predetermined. The objective has already been predetermined. We are bullish. Okay, news showed us that. So now 9:30 open, as you guys can see here. Let this play out. get a little bit closer to that 9:30 open, because again, I don't really trade anything other than news. Okay, like I would say 15 minutes after news hit. Okay, or the New York stock exchange open. Okay, so those are the only times that you guys will see me pull the trigger. Is the New York sorry, I have to say it a lot. The New York Stock Exchange open, that's when I trade. The only times that I'll break that is news. Okay, and now you guys can see why I do that, because around the open you always get a nice opportunity to get into the market. Price action to me still looks at this point pretty bearish, still walking itself down, right? I'm still looking at this imbalance to seeing for a potential reaction. Okay, and then I start noticing right before the open, what do we start getting? Some equal lows, right? Not just that, but we get some equal lows over here that we take out inside that imbalance, and then we get some more relative lows here, right before the open. Okay, and so I'm looking to see what happens after the open, and this is where I personally went into the 15-second time frame. And if you don't have access to the 15-second time frame, it is the premium package on TradingView. The premium package. I highly suggest, if you don't have seconds, to try it out. It's pretty fun, and I use them for extra confirmation for trades like this. Okay, so I personally, that played out. My thought process was to see price action return back into at least 50% of this imbalance. I'll show you guys right here. Okay, at least 50% of this imbalance here. Okay, and I usually enter the market at the opens of imbalances, but because we were still far from the open, I didn't want to risk it. And also the risk to reward just didn't make sense. That's a 1 to 2. I don't like taking trades like that. I like at least a minimum risk to reward of a 1 to 3. So for me, it made more sense to lower my risk, or the size of my stop loss, and aim for 50% of that imbalance. Now here's the risk is, yeah, you may be having a tighter stop loss, but what if we don't make it to 50%? Then I guess I'm not taking that trade. And that's fine, guys. It's fine. I'm okay with that, right? And so I'm here waiting on my first entry to get tapped into around the open like this. Stop loss is below the low of that imbalance. Take profit is at those equal highs. Okay, we get the open, and this is where I dive into that smaller time frame to see what's going on in here. Okay, then you get another push down, and then we finally get this reaction to the upside. Now personally, I like to wait for a nice break, but at this point, guys, okay, my first entry was at that 50%. Okay, and when I get a break of structure, that's when I add another entry. And so notice here we have this order block. Okay, and so if after we broke here on the 15-second, if we return to that, I'll take another precision. Okay, and notice that we didn't come back, right? And so my first precision was based off the 5-minute. Okay, and that's literally like my thought process, exact thought process for trades. I split my risk between 2 entries. I risk 1% per setup, not per trade, but per setup. This whole thing was one setup. So I risk 0.5% per trade. And so my first 0.5% was here. And if price would have came back, okay, into my imbalance or into my order block, I would have pulled it again towards those highs. Okay. But because I didn't get that risk, I didn't get that return, I didn't pull it the second time. And this is literally how I walk through my trades every single time. I take my initial entry and then I wait for the reaccumulation or redistribution in my area for a re-entry. Okay. So yeah, so this is the way that I took this trade. Right below these lows, you see how all these confirmations, and again, I'm only adding on because liquidity has yet to be taken. So now we take that high and look what happens after. I want to show you guys what happens after we take those highs to the left. Right? We take that high to the left, and then what happens to price? Starts melting down. This is our entire range here. We're making it back down into discount price action. I'm going to bring your attention back over to the 1 minute. And what is the market seeking? What does the market seek? Liquidity. Right? We have these lows here. We have this previous area of accumulation here, right? Let's go back to the 5 minute, let's see, or the 15 minutes, see if we have a nice order block in these areas. Yes, we do. Nice push down. Okay. Awesome. Yeah, we have a nice push down here. So we have an order block, a bullish order block. Okay. We have these 1 minute lows right in here. And we have what I always tell you guys to look for entries, insufficiencies. Now obviously this imbalance is really big, okay, and I'm not just gonna put my entry at the open of it or the entry at the open of what's left over of the insufficiency. That's way too big for me. I don't take such big stop losses unless the risk to reward is there. But as you guys can see here, we came into this previous area of accumulation, and I'll show you guys one more time why it is that I wait for evidence when coming into my area. You see that we come down into my area here and then start showing signs of what? Accumulation, right? So we get this slight accumulation here. This is the candle, to me, that pushed into that liquidity, came into that imbalance, and the one where I personally want to see some liquidity, some lows get taken prior to me running for this entry, right? So that order block and a liquidity sweep. Remember guys, liquidity always has to be taken. Okay? Liquidity is the name of the game. And again, you could just be aiming for back to the same range. Remember, 50% is premium, just right there. Another trade, a 1 to 3, 3%, 3%, almost 4% on this one, almost 4% on that one. Right? It's as simple as that. Now, guys, one thing the reason I wanted to show you guys this is because, yeah, I dive into the seconds time frame. Yes, I do take seconds trades, but this trade was totally based off the 5 minute. Okay, I want you guys to take note of this because I know you guys see me take seconds time frame entries. You do not need seconds time frames to be a profitable trader. You do not need a seconds time frames to be a profitable trader. Okay, 80% of my trades are taken on the 5 minute or above. My favorite trade setups are between the 5 minute to the 1 hour. Okay, so with that, I'll show you guys what happens for the rest of the day. Of course, you guys probably already know what happened out of that area. I mean, price action just blasted through, right? All the way to those highs that we were aiming for. And into equilibrium, back into premium on the daily range. Guys, it's all about liquidity. Liquidity is the name of the game, will always be. This is the algorithm. This is the way the markets were coded. Okay, this is a code in the market. It's not buying pressure, selling pressure. It's literally an algorithm that was a code that was set on the market to seek for liquidity. It was engineered to seek for stop losses. It was engineered, right, to take people out of their positions. That's why trading is called the hardest easy money you'll ever make. The hardest easy money you'll ever make. Because yes, you can make a couple grand, a couple hundred, a couple grand, a couple million by a click of a button. Right? And it'll be the easiest grand, the easiest thousand, the easiest million that you'll ever make. But it was the hardest path to get there, right? Because the reward in trading is so high only because so many fell at it. If more people succeeded in trading, the reward wouldn't be so high. So understand that you're a part of an industry that is so challenging that most people fail. But that is why the reward is so high. Right? Anyways, guys, I've been on here for 47 minutes now. I apologize for dragging on for so long, but I appreciate you guys hanging out with me. I truly do. I enjoy you guys, your guys' energy a lot, your responses. Guys, I know that this video may bring up a lot of questions, but please don't hesitate to reach out. That's why I wanted to make sure that you guys are aware of how to reach out to me, how to get a hold of me. And you know, I just want you guys to know that I truly enjoy this industry and I truly enjoy what I do. So I may not always get back to you right away, but I will definitely try to get back to you within a 24-hour period. Please guys, if you have any other comments or questions for any other videos, drop it down in the comment section, and I'm more than happy to see if we can create some more videos along those subjects. I know people wanted to see how I take my entries, so here's an entry video of how I personally take my entries and exits. And I just want you guys to know that, notice like one last point, okay? I showed you guys all the exits. I knew all my exits way before I even knew where I was entering. I know all my targets way before I even consider an entry. Entries are good, but exits are so more important. So write this down as a final note in big capital letters. Exits over entries. All right, exits over entries. Your exits will be so more important than your entries will ever. All right, so with that guys, I will let you go. I will continue to do breakdowns like this one, and I will catch you on the next one. Okay, peace.